The stock market today had a pretty crazy end of the day rally, and I want to go over the headlines that came out that could help explain some of this price action in the final minutes of the day today. But I really want to talk about Tesla. Not a big shocker, I'm sure, to most of you. Tesla did recover a fair bit towards the end of the day as well, but had some pretty wild sell-offs today also. There's really like 2 or 3 notable ones here that sent the stock lower. And to be honest, I'm about to go all in on Tesla again. Now, what does all in mean? Well, not exactly like sell everything and buy Tesla, but put a large chunk of my portfolio into Tesla, to take the cash that I have on the sidelines and put it into Tesla. And I'll explain why that is here in this video. And last but not least, we will also cover the data coming out tomorrow morning and in the afternoon hours that could be important for markets, including the FOMC minutes. So honestly, there was a couple of headlines that did come out towards the end of the day today. I'm not exactly sure which ones caused markets to move higher. It's probably this one. Trump says that he is confident after good talks on Ukraine, says US won't need to deploy troops, but fine with European peacekeepers, believes conflict could have been settled earlier with a deal. And Trump says that they had good talks on Ukraine and that he is more confident. And really this just has to do with alleviating uncertainty, global peace. The war in Ukraine has been kind of a factor to push on inflation for a while, with some of the sanctions on Russia and some of the disruptions to the global supply market. Like Ukraine, for an example, is seen as the breadbasket of the world. So a lot of food price inflation could actually be boiled back to the war in Ukraine. That's one example of many others. You also have a headline here that Trump says car plants are going to be built in the United States and auto tariff rates will be around 25%. And finally, you have this headline here that says U.S. judge denies request by state attorneys general to temporarily bar Elon Musk's Doge team from 6 government departments and OPM. So the judge is letting Elon and Doge continue with essentially their government off audit. Now, before I tell you specifically why I'm going all in on Tesla, I want to play you this clip, okay? It's from Morgan Stanley's Mike Wilson. You may know Mike Wilson as being the guy that was bearish in 2023 and 2024. He was kind of like demoted, if you will. So take what he says with a grain of salt. He has a great track record the last couple of years. Haven't done as well. So again, take it with a grain of salt. There's one thing specifically he says later on in this clip that I have been saying for literally 6 to 12 months now.
The AI story has been really about the enablers, the picks and shovels. That's sort of fading now. And now it's about the application layer and then the power to kind of, drive these new networks.
What does that mean, the application layer?
Software, effectively. So, all of the
like an app lovin', you're not a single stock guy, but is that like why an app lovin' is up 500% recently?
Well, sure. I mean, and think about the money that has to move, right? So the money, the large chunks of money were in the hyperscalers and some of the picks and shovels, and then it has to go into maybe perhaps smaller names. And I think that's why you're seeing outsized moves. Some of those are probably overdone. But at the end of the day, all of the value add generally in compute is done at the software level, ultimately. If you think about the internet itself, the long-term value creation was in the applications, right? Not in the infrastructure itself. The infrastructure is the highway, but then the value add is in the software. So we're moving into that phase of it. And then also the adopters, the companies that are actually adopting some of this stuff and are facile with big data sets, they've benefited from AI early on. And the market's smart. The market's been making that shift now for the better part of 4 to 6 months.
Okay, now how many times have I told you guys on this channel, really for, again, 6, 12 months now, that the focus is going to switch from semiconductors or the enablers of AI to the appliers of AI. I have shared this concept with you, long before Mike Wilson said it, months before. And when you're thinking about AI appliers, there is no bigger AI applier than Tesla. And I think the markets are really discounting what Tesla is doing right now. Hence the, 27% decline we have seen from the all-time high, 27.5% decline from the all-time high. At the low here on February 11th, Tesla was down about 34% from all-time highs. In a year in which I believe AI appliers are going to be the main story, I think Tesla has a lot of room to catch up here. Okay, that's number one. And I also like how Mike Wilson said, again, what I've been saying for a while now. I've been saying this at least for the last 2-3 months, that, with the internet, I think that's the greatest example to AI is really the internet, right? The hardware providers of the internet are not the companies you think of the big, internet winners, right? The big internet winners are the Metas, the Amazons, right? The companies that built things on top of the internet, okay? The actual infrastructure. It's kind of like NVIDIA. NVIDIA is like the, hardware of the internet, as Mike Wilson put it, the highway. And companies like Tesla are actually going to be the big winners, the big beneficiaries. Now, I do think there's other stocks out there as well, other AI software names that are really good. I'm invested in quite a few of them, have been for a while now. Again, I've had this this ideology for 6 to 12 months. I've been positioned for this. If you guys want to see the stocks that I'm currently invested in, check that link out down below in the description of this video. But I do think it is time for me personally to go all in on Tesla again. Okay, I think the fear in Tesla is really hitting a tipping point. Okay, where again, the stock has gotten beaten down. People literally believe Tesla's brand is being damaged right now. Okay, I understand why. If you watch CNN, MSNBC, if you watch legacy, media, you believe that. But it's really hyper fixated, those, that media, on the small percentage of people that do not agree with what Elon and Trump are doing. And you're always going to have people that disagree with a brand, with a product. Like, that's always going to happen. But I believe it is a very small percentage of the American Commonwealth or population. I think the vast majority of America, 95%, believe we should not be funding these outrageous overseas projects, right? That Elon and effectively Trump are doing the right thing for American taxpayers. And I actually think, I know it's crazy, but this is going to have a positive impact to Tesla's brand. I actually think Tesla is going to benefit from all of this increased, publicity that they are getting. And that's just my expectation. Okay, I obviously could be wrong there, but I don't think I am. Now, let's think about recent developments that have happened since Tesla has fallen from all-time highs at $488 down to $354 per share. And there's been a lot of them. Tesla has started hiring 12 to 20 new positions for mass production of Optimus later this year. We are going to have commercialized Optimus bots in factories by next year performing tasks. Did Wall Street care about that news? Not at all. Elon Musk reiterated that different, potentially multiple lower, cheaper priced Tesla products are coming to the marketplace this year. We actually got news yesterday that the Model Q is on track to come faster than expected. And Joe Tedmeyer on X, I shared this a couple days ago, posted a video of a new production line going in on the 3rd floor of Giga Texas. Okay. Robotaxi is not only going to launch in Austin, Texas this year, but is going to launch, as Elon says, in different areas of the United States by the end of this year. Trump has recently just elected a new National Highway Traffic Association head, if you will. I don't know if it's like the president of that, commissioner. I don't know the technical term off the top of my head, but he worked at Apple for a long time and on Apple's autonomous vehicle project, and is seen as very positive from a regulation standpoint for Tesla. What else has Tesla done? Well, Tesla just turned live their new Megapack factory in China. Tesla just started production today in China of the new Model Y, with production that has started in Texas. And while we haven't heard much from Tesla, the company, Elon Musk says the new Model Y is selling like quote unquote hotcakes. This does not seem like a tarnished brand to me. And I think Wall Street is heavily now discounting what we're going to see from Tesla. And I think part of that, in all fairness, is the slowdown in deliveries that we've seen in January. But we have to be logical here. Okay. Could there have been just an organic slowdown? Sure. But what makes more sense? Just an organic slowdown where I believe China was up 30% year over year for vehicle deliveries in January for all EVs, and Tesla was down like 10%. Okay. Why? Because Tesla is launching the new Model Y right now. Why would you go out and buy the older Model Y, which is roughly the same price point, instead of getting the new Model Y? You wouldn't do that. Okay. There's reports that Tesla has over 200,000 pre-orders for the new Model Y in China alone. I'm sure that number looks quite similar, if not more, in the US. And it's like Wall Street just hears what they want. Okay, for now at least. There's a bearish narrative to kind of hang your hat on. But when things are said and done, I don't think this will be something that we will even think about 3 months, 6 months from now. It's going to be a complete nothing burger as far as the whole Tesla's brand is being damaged argument that a lot of bears are really overplaying right now. And part of the decline in Tesla stock, again, is those delivery numbers for January. Wall Street has been taking down their estimates for Q1 deliveries, and I think that's probably appropriate. Okay, with a new vehicle launching, Tesla stopped producing the old Model Y. They're starting to produce the new Model Y. That doesn't happen overnight, but I think demand is going to be very strong. And that sets us up for upside surprises to, second quarter, third quarter, and fourth quarter deliveries for Tesla. I also do believe as we get later into this year, the story is going to be a lot more about Optimus than anything else. And really today, none of the Tesla story is about Optimus. So as that grows, you're going to see Tesla stock move higher on that. And again, that really comes down to, I think the markets are going to try to seek out the biggest AI winners as far as appliers of AI. And there is no bigger winner than Tesla when it comes to AI appliers. We also did get news today that Elon's compensation package has a path to getting reapproved again. And it's basically a law that Elon's lawyers are fighting to reinstate in Delaware, from my understanding. And sure, these things are going to take some time, but in the second half of this year, you could see that whole Elon compensation package argument, really, that whole story is going to go away. After, many companies now, including Meta, are opting to leave Delaware. Delaware is in a bit of a problem because nobody wants to incorporate their company in Delaware when you just screwed Elon, right? You backdoored Elon. If you're a startup company and you have high aspirations, the last place you want to incorporate is Delaware, because if you make a lot of money, and somebody, a shareholder says, oh yeah, well, I don't like that, and they sue you and they own like 20 shares, they can void a $50 billion compensation package at the time. I know it's worth a lot more than that now. That doesn't make a whole lot of sense. And I think Delaware's trying to get on the right side of that, push to reinstate Elon's comp package when all things are said and done. Now, I also must consider to myself, while Tesla has fallen almost 30% from all-time highs at the time of recording this video, option activity has been exceptionally bullish in Tesla. Hedge funds and institutions, they're going out and they're buying leveraged positions to the upside on Tesla. Why is that happening as Tesla has fallen so much? That has to be a bullish sign. You have 169 different trades totaling $280 million with a positive order value of 84%. On Friday, you had $540 million worth of option activity with a positive order value of 86%. Over the past week, you have had 3,000 different trades from hedge funds and institutions, totaling almost $4 billion with a positive order value of 62%. Again, keep in mind, Tesla has been falling for the better part of like 2.5 months now. Even today, as Tesla stock was in the red, short sellers covered on 42,000 shares. Today, shorts were not adding to short positions. They were covering on their short positions. And this is not going to come to you guys as any kind of surprise here. But Tesla's short interest is at the lowest it has ever been before. And as I said in the last video, I'm smarter than Wall Street. You're smarter than Wall Street. I think you guys are more in tune with the companies that you follow, right? I think we have vastly more knowledge and a better understanding of Tesla or our specific companies that we like versus Wall Street. But Wall Street has one advantage over us. They have friends that know people and they talk and they, round table dinners, they share information. We do not have that kind of insider information. So you always want to consider that in the context of how do we measure what those conversations likely look like. And I think one of the best ways to quantify that is one, the option activity and the short positioning. If the shorts are adding to short positions as the stock is falling already, then that means they as a collective expect the stock to fall more. If they're buying more puts and leveraging to the downside for a larger drop, that means they're expecting the stock to fall further. This is pretty simple stuff. If they're covering on short positions and they are in fact the most bullish they have been in the entirety of Tesla's business history, as the stock is down 30%, that is a pretty damn good sign that you have already experienced most of the downside. Now, obviously, we can't account for what happens with the broader markets. If, bad news comes out or bad headlines come out, then obviously the markets can fall. We're not immune to that. But minus any dramatic event happening in our markets, I think the worst is likely over for Tesla. And that is effectively why I want to go all in on Tesla right now, to dramatically increase my position in Tesla, because I believe Tesla will be a $900 stock by the end of this year. I want to put some serious money behind that, because at this point, after the 30% drop, that is 153% upside. And I mean, honestly, I don't think there's any way that I will be wrong on this, unless, of course, something dramatically goes wrong in the markets or the economy. But I don't think that's the case. And with a market that is as big as Optimus and full self-driving and robotaxis, specifically Optimus, it's really hard to put a limit on Tesla stock. A lot of people, like Chris Camillo, believe that Tesla is going to be a $10 trillion company just based on Optimus alone by 2030, just producing about 1.5 million Optimus bots. With those kind of numbers, even if you're half wrong, that's a 5x in 5 years. That's 100% annualized return for 5 years. And I think that is a true opportunity. And it's I mean, it's one of those things where, yeah, you can go YOLO your portfolio in some other AI name. Maybe it does well. Maybe it does nothing. Maybe it goes to zero. Maybe it goes bankrupt. Tesla, the odds of bankruptcy, the odds of a serious catastrophe are pretty low in my opinion. Obviously, something could happen that could change. But humanoids are coming. Robotaxi's coming. I think that is almost a certainty at this point. The question is, how long does it take? And I think Wall Street's going to price in a lot of that good, far sooner than a lot of us believe, far sooner than like 2030 or even next year when we're expecting commercial launches of Optimus. And ultimately, when things are really said and done, I believe the fear of Tesla's brand destruction and the slowdown in pure EV sales is way overdone. I actually think this whole thing could be a big net positive to Tesla. Because, I mean, think about how many people that may have not had too much exposure to the Tesla brand are now seeing Tesla everywhere. I mean, that in and of itself is very powerful. As they say in Wolf of Wall Street, which I think this to some degree has a real kind of connotation to it, that all publicity is good publicity. Even if it is bad publicity, it's publicity, which is something, Tesla doesn't even have to pay for. So sure, could Q1 be a little rough because they're launching the Model Y? Of course. But I think it's the next 3 quarters afterwards that are going to look way better than Wall Street expects. And Tesla could put up 20% delivery growth this year. And I mean, that is not priced in as a consensus for Tesla. And a new headline is coming in right now that is giving the markets a little bit bigger of a boost here in after hours. Trump says he has instructed the Justice Department to terminate all remaining Biden-era U.S. attorneys. Maybe that is perhaps because it's going to be easier for, business to get done, Trump to deregulate things. I don't know exactly why the markets took that positively. You can see that little candle here in after hours, 2 of them back to back, but that's the headline. Now, coming tomorrow, we will get building permits, preliminary data out of January, and housing starts. I think this data could be important because the NAHB housing market index today, really sentiment among home builders came in pretty bad. I mean, like really bad. And we will see if that actually feeds into some of the hard data here with housing starts or building permits and how the markets take that in regards to inflation. We also have the bigger catalyst tomorrow, 2 of them actually. At 1 p.m., you have a 20-year bond auction. If we have good demand and there's a lot of buyers there, 10-year treasury yields are going to fall. If we do not have good demand and there's not enough buyers, yields are going to go higher. And that's really what you want to watch for. The last 20-year bond auction was 4.90%. We haven't had one in a while. We're likely to see some good demand come in there, considering 10-year treasury yields are 4.5% roughly. You could see this come down quite materially. So that's going to be a bigger catalyst for markets tomorrow at 1 p.m. And then you have the FOMC minutes. It usually causes some volatility when it comes out at 2 p.m. It's like the transcript of the last Fed meeting. The parts they want you to know, it's already known information, but it's kind of just reiterating what we heard at the last Fed press conference. So, I don't think it's going to be a huge market event, but it will be important. On Thursday, you're going to have initial jobless claims, Philly Fed data, business conditions, CapEx index, employment, new orders, prices paid. Specifically, the prices paid component will be of the utmost important for markets. And then on Friday, we're going to get existing home sales. For January, global composite PMI, global manufacturing PMI, and services PMI, specifically a focus on services because services fell a lot last month. If they fall again, there's going to be more concerns about a broader economic slowdown because services is like 80% of the economy. So manufacturing's been in a recession for a while, but when it's only 20% of the economy, it doesn't matter too much. It doesn't matter too much to the Fed. But if services start to slump, that's a bigger issue. And then final numbers for February's Michigan inflation expectations survey. It's really the consumer sentiment survey, but the part that we care about is inflation expectations. And these should come down from the 4.3% number we had, in the first reading, which was a big skyrocketing, really based on Democrats listening to social media and about tariffs causing inflation, which we haven't seen tariffs, too many of them anyways, and we really haven't seen any inflation from those tariffs so far. So if that comes down on Friday, that could also be good news. So let me know what you think about this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.